let's get more on the economic growth story in China and indeed what's been happening with the property market there. Stephen Schwartz is chief economist for Asia at BBVA. Stephen, you spent a lot of time at the IMF analysing all this stuff here. But first up, let's say you lived in Beijing. Would you consider buying a property?
Well, I think the long-term outlook for China's property market is very bright. So from that perspective, I certainly would. In the near term, because prices have risen so rapidly, there are going to be downward pressures on prices in the very near term. And clearly that's being fed by the government's tightening measures to cool the property sector.
But you can't really paint the same brush over the whole of the property market in China. There are pockets where things are looking a bit toppy. There are other bits where perhaps we could see growth at a phenomenal rate for a while.
That's right. I mean, you've got to differentiate between the different tiers, the high end, the middle end, the low end affordable housing market. The second and third tier cities haven't seen the run-up in prices. So there's certainly pockets of excessive valuation in certain cities, but it's hard to make a generalization across the whole economy.
But you're not saying a bust is on the way, though?
No, we see a soft landing scenario for the economy in general and for the property sector in particular. You know, we just put out our annual real estate outlook on China, and we compared the run-up in prices in the residential property sector in China compared to international experience, such as what happened in the U.S., Japan's famous bubble, and in Spain. And judged against those episodes, the run-up in prices so far in China does not look particularly worrisome.
But when you look at some of the figures, I mean, JP Morgan came out with this affordability ratio a few months ago, talking about Beijing. 102% is the ratio here. That means if 102% of the average household income goes on a mortgage, I mean, that doesn't even add up as far as I'm concerned, but you've got 100% or whatever. How much of a problem is affordability? Affordability
is a problem, and I'd say that is one of, if not the main concern of the authorities right now, because by international standards, price-to-income ratios are running 2 or 3 times the level in China's big cities. So as China's growing very rapidly and prices are reflecting that future growth potential, it's pricing out the low-income segments of the population. So affordability is probably the key social issue when it comes to the property sector, and the threat of destabilizing financial bubbles is the other worry.
Wage pressures are on at the moment. Is that one of the reasons why you also see this market not actually having a hard landing?
Well, wage pressures are rising, and that's a healthy development because it's all part of that transition to a more consumer-oriented economy. It's time for that growth to be shared among the workers in China. So as we look forward, we project pretty high rates of income growth, which over time should support that strong underlying demand for housing in the coming decade.
Okay, are the government's policies working, or is this a cyclical thing that's going on in China now?
Well, it is a cyclical thing, and I'd say the government's policies are working. They began to tighten the housing sector through restrictions on lending early this year, and in April they intensified those measures. We've seen volume transactions coming down sharply. Prices have moderated, but are not yet really coming down in nominal terms, but we expect that to happen over the coming year.
Stephen, thanks for coming in. Stephen Schwartz from BBVA, just taking a look at the property market in China, also looking, of course, there at how things are playing out with the economy in mind as well.